Okay, so for here, you need to know is sole trader business, right? They are just one owner and they have a lot of or few employees. Okay, but owner, boss only have one. Okay, that's the thing you need to know. This is called sole trader. Then advantage and disadvantage of forming a sole trader or operate as a sole trader, right? Okay, advantage is since we just say like only one owner, right? You can complete control over the whole operations. Okay, no one will disturb your decisions. Okay, so they can complete control over the whole operations, and then the decisions making would be faster since they no need to consult from anyone. Okay, they can decide themselves. Okay, and also all the profit that belongs to the owner, to the boss. And it's more easy to set up as you just need a small amount of capital. You don't need like 100,000, maybe you just need few thousand, then you can start up the business already. Okay. And then no legal requirements to publish your financial statement. There's few advantage. So advantage and disadvantage part is quite important because they like to ask in the IG paper, or they like to ask you in IG paper. So you guys have to know, Masa. If you are taking business, then I think you guys already know lah. If you are not, then maybe you have to memorize it, okay? Because econs and this a bit different. And then the next one is a disadvantage. Okay, disadvantage is about decision making. Okay, we already say you no need to consult from anyone, but doesn't mean that the decisions you make right is correct one. Where maybe you did something that's wrong, so your decision making may be impaired because you have just limited understanding. Maybe some of the things that you did it will be wrong. Okay, you have to depends on the things. And then the sole trader have unlimited liabilities. Okay, they have to bear all the debts. They have to pay all the debts. Okay, pay all the debts. Okay, no matter how much you're owing to each of the supplier, you are the one that you have to settle all the debts. Okay, you can't just leave it there, okay, because you are unlimited liabilities. And then you will find it difficult to take time away because you are the only owner. Okay, if let's say you want to go for a trip for 1 year, you can't because you are the only boss. Okay, so you have to stay in the country, okay, to settle down your company stuff. And then it will be very difficult to raise additional finance. Okay, the way to raise the finance, right? You have only two ways. First one, loan. Second one, introduce capital yourself. That's it. Okay, you can't do like others, ask others to invest money. If you ask others to invest, then that one will be partnership limited already. Different company lah. Okay, so then next one, disadvantage and disadvantage. So all the company, right? Why is so important? We need to prepare financial statement, like your income statement, your SOFP. Okay, we prepare each of the things here, income statement and SOFP. These two is for different purpose. Income statement is to calculate your gross profit, your profit for the year. But statement of financial profit, financial position is to find out, to provide the details of the company resources, like what? Your asset are, your liabilities, your capitals. Okay, this is the things that we need to use it to calculate it. Okay, so it's different things. Okay, and then actually why we need to do these kind of things. So we do this kind of assessment, you can lead to some of the things like you can think if you need to improve on your profit or how to improve it. Okay, so or whether you need to invest any additional additional resources, okay, or maybe you need to raise finance or not. Okay, so these are all the things that you can get it from the financial statement to see how to improve, okay, to see how's your performance of the company. Then we do adjustment, do improvement. Okay, that's the thing you need to do. Okay, then at the back, all is just like format. Okay, so all the thing is just format. Okay, for the income statement, you have to be careful because you have two types of company. Okay, first one is your trading business. Second one is your service business. These two, they are different. Trading business, you have a sections from your sales until gross profit. This one we call it as trading sections. Okay, this one we call it as trading sections. Only when you buy goods, when you sell goods, you have this one. Okay, only when buy or sell goods. Okay, so And then the bottom part later same as the bottom lah. Okay, only when you see the questions, they give you inventory, then confirm this is a trading business. Okay, if service business, no inventory, because inventory is already like your goods, okay, like your stock. So if you have inventory, it means you are selling goods, you are buying goods. If not, then you are not. Okay, this is the thing you need to know. And then I scroll to the bottom. Okay, service business more easier. Why? Because you just need to start from the bottom part here until profit. Means from the service business, right? You can't see any gross profit, you can't see any inventory. You just need to use income minus expense, get profit, that's it. Okay, so service business is the one student like to do it because it's shorter and it's easier. But others, they are not, okay, because like it's too long, okay? So then next one, this is SOFP lah. So SOFP, right? No matter they are trading or service, right? They are same. Okay, the way of doing it, same, just same thing. You have to prepare 3 columns. This is a must. If you have cost, you have provisions, you have net book value, then you must prepare 3 columns. You cannot skip either one. Okay, so unless the questions, you guys don't need to scroll. Unless the question, they straight away give you net book value like this, right? Then when you prepare the SOFP, no need to prepare like 3 columns. You can just prepare 2 columns. Okay, if they give you net book value. If they didn't, if they give you something like okay, they give you like cost, like provision, right? Then you must prepare 3 columns. Okay, so this is the difference. Because some of the students, they see net book value, then they ask, I prepare 3 columns, how to write? Actually, you just prepare 2 columns. Okay, so and then after this one, you have to know is the bottom part. Okay, for this one, this goodwill part, they like to ask in paper 1. Or they like to ask in paper 1. Okay, this one you just know what is. So goodwill actually this one is same as your copyright, your trademark, your brand names. All the things they are not physical present, like you can't see it physically, then there's a thing under your goodwill lah. Okay, but it belongs to you. They still have a monetary value. Then this is called intangible asset. So not only they'll give you goodwill, they'll give you copyright, trade names, trademark, and then like brand name, this kind of name. Also, they'll write it in the questions. Okay, so you not only need to know this, the other 3 also you need to know, because these are the 4 things they like to ask. Okay, and then this is the part that we learned before under accrued prepayments topic. Accrued and prepaid expenses. Okay, not sure if you guys remember. Okay, so this is the things that we learned before. Okay, so inside here we only have 2 things: other receivable and other payable. So since we already say receivable is the one that under your current asset. Same as trade receivable. Then trade payable will be the one that under current liabilities. Okay, so inside here, you have prepaid expense, accrued income for receivable. You have prepaid income, accrued expense for payable. Okay, that's the thing you need to know. Okay, then, okay, I explain first. Later I get the paper for you, you can write down. Okay, so preparing the income statement of the service business. They say Chen is a business that offer bookkeeping service for the local businesses. On 30th September 2019, right, he was able to provide the following information. So this is the list of items that we have. Okay, every time prepare income statement, see additional information. Most important is the bottom part. They told you that you have electricity 330, staff wages 720, due but unpaid. Due but unpaid means accrued. Okay, it means accrued. So this is accrued. Accrued, then what we need to do? We have to plus. Okay, so we plus it together. And then insurance 150 and the rent 630 prepaid. So if you see prepaid, then we minus. So the policy of the depreciation is 20% using reducing balance method. So they already give you net book value, right? Means you no need to use like cost minus provision for depreciation multiply by percentage. You can straight away use net book value multiply by percent. They are same thing. So I already know I have two net book value here. I straight away multiply by 20%.